Hi everyone, this is Rob Roy, and welcome to the Elliott Wave Elite U.S. Market Update. Taking a look at the charts, they'll show pretty much what we've expected, where we've had the relabeling now with the Wave 3 moving to the upside, based on the fact that we knew that we had passed the previous Wave 4 corrective Elliott Wave and Fibonacci levels, and we have been talking about the fact that following Elliott Wave rules, the next move should be a retracement of the previous impulse move back up to somewhere around in here with the recent highs, and we are really getting fairly close to that neighborhood now. We're really only about 40 S&P points away from reaching that level of the previous highs, and then it'll get pretty interesting from that point as far as when does the wave 4 corrective move starts. And we know how all this works. When you break to new highs, it's all over the networks, it's all over the magazines, newspapers, etc. All the media covers it, and then you get the retail traders that have not been a huge participation of retail traders in this move. They really seem to get spooked with the move downward into Christmas. Well, that'll bring them all back out, and then when the retail traders come back out, then you're pretty much set up for the next corrective move to the downside. So that's what certainly looks like is going to happen in the not too distant future. We're pretty close now. With the SPY bringing volume in, as we always do, you can see that volume has started to fall back off again with this last piece of the move to the upside. Volume has dropped off a bit. That's never a good sign for a continued move higher in a market. Weaker and weaker volume, and then the shorts feel like they can come in and dominate things when the volume begins to dry up. VIX has been pretty interesting, fairly spot on with the lows here that we've been talking about near 12. I haven't quite made it down that level to that level, but it seems like just getting close to it has added some support. And then we've had a couple highs above 16, and not really a descending triangle here because this is too high, so you would just still look for just this area of support through this 12 plus range on the VIX, and we're almost back down there again, so seems like we would be looking for some sort of a corrective move in the not too distant future here as well. So they're kind of lining up, the market, Elliott Wave pattern, and the VIX. So we only have a little bit more to the upside to go on the SPY, and then we have a little bit more to the downside that we could do on the VIX as well. Or we could correct pretty much at any time from here. TBT is quite interesting. We've followed how well this Elliott Wave pattern worked with a perfect 38% correction in the Wave 4, and then the Wave 5 extension that was really spot on with where the forecast was. And now we're bouncing back to the upside, and I'm sure you're aware of the Elliott Wave rules. You should be, that the target price is now a retracement of this Wave 5 back to the Wave 4, so we should have a little bit of a move higher now in interest rates as we head back up towards that 36 plus level. We do have a little gap. There's a couple gaps in the chart that need to be filled. Maybe we come down and fill those gaps first before we begin to move to the upside. But there's always the possibility that we could extend this Wave 5 down. Remember that a 38% Wave 4 correction yields a 61% Wave 5 extension. So that's what we've had. But you could get an extended Wave 5. So again, the pattern to the downside worked perfectly. But we could get an extended Wave 5 down if we get a big sell-off in the market and money begins running into bonds. But again, we don't think that we're there yet. Looking at gold, gold is really interesting as well here. We're down here testing this area for the third time here around the 121 area. It's right at that 38.6% fib retracement here as well. And usually when you test for a third time, whatever happens from that, call it third time's the charm, whatever, whatever move happens from there is usually the definitive one, meaning that if we bounce off of this level, the likelihood is that we will continue higher. If we break this level, then the likelihood is that we continue on lower. Not that we keep bouncing off that level, is my point. So the third really clean time that we've tested that level leads to pretty interesting next week as far as the future movement for gold and GLD. We had a pretty good turnaround today. Gold was actually down earlier, came down, hit that level. You can see that the low was 120.96, right at the 121 level, and then we bounced up and ended up closing to the upside. So that could be viewed as a reversal day. We'll see if we get follow through tomorrow. Also wanted to show that our MPWR butterfly that we had been talking about was closed out this week. It had right at 100% profit in the butterfly, even though the target price had been 150, which was the midpoint, and we were trading this zigzag pattern, as you can see here, with the ABCs. So very nice zigzag pattern, set up perfectly, and it may be that MPWR continues up, but when we got this move on the third with the big move to the upside, too much profit to risk letting go when you're getting closer to expiration. It was a April position, so running near expiration, wanted to go ahead and take that profit, but again, just the retracement back to the previous wave 5 and the Elliott Wave zigzag pattern worked perfectly for another really nice gain right on top of the one that we just had with AutoZone. Well, add to that Starbucks. We've talked for some time that our midpoint was 74, and look where we went. We marched right up there. Look at this move here. Talk about a 45-degree angle. That's about as clean of upward movement as you can get on the last segment of this wave 5 extension, and right to our target level, which is right around that the fib level extension. So again, our butterfly set up around the 74 level, hitting it dead center. So that's three really nice moves with butterflies right in a row. Do have a new case study for you to look at with KKR. This one's pretty interesting. We are looking for a continuation of the wave 5. A little bit of a triangle here, but as you know, in the trading system that I've created around Elliott Wave, with Elliott Wave being by far the primary part, but there are other confirming indicators that I like to look at. Well, if we look at the money flow, look at the money flow that's piled into this. It hasn't been reflected in the price of the stock yet. The stock has just been consolidating this last little piece of the move to new highs. So we moved to a new high, or just a recent new high. I mean, not long term, because obviously we were higher back there, but recent break of this wave 3 top, and so we've come down, we've consolidated, we've got money pouring in. Usually when that happens and the money comes in ahead of time, then eventually the stock price catches up, and we end up with a continued wave 5 to the upside, and that's what we're expecting. So just long calls out of this one, not butterflies. Haven't talked to you about this in a while, but I wanted to give you an update. Really exciting. We've been working on our new website. If you like this stuff, you've been following along. We've got a lot of people that have been following along, and certainly can understand that with the performance of Elliott Wave over the past year and a half. Our new website is almost ready to be launched. Literally within the next week or two, I think I'll be able to give you the URL that we're live and ready to go. We're just doing some final testing now, so really exciting news to give you more education if you've liked this that we've done so far, and want to follow along with the case studies that we provide, and certainly do it more often than just every week or so. Hope you've had a wonderful week. Be back to talk to you again next week. Take care, everybody.